How's it going? Welcome back. This is Jonathan, and in this video we're going to be taking a look at two markets. Now the first market we're going to be looking at is the Dow Jones, because I believe that we could be entering a very interesting time period. So I did want to cover that one first off, and then the second one we're going to jump into the Bitcoin chart, because that's what everyone's talking about and that's what everyone wants to know about. So we'll take a look at that. Now if you haven't already grabbed some of the books that we've been talking about, you can go out and just buy this book. A lot of what I discuss, a lot of what I teach, and a lot of what we go through is old knowledge, okay? So it's all about finding ways that the old knowledge is overlaying into new markets and new ways of doing things and new software, etc. like that. So if you haven't already, jump out, grab Gann's books, and I can tell you that your way of thinking about the financial markets, your way of looking at the world as a whole is going to change. So we'll skip the bullshit. Let's get straight into it. Let's take a look at the charts. Alrighty, so we've got Optima opened up. Let's go ahead and just first of all open up the US markets. We'll take a look at the US markets first, and then we'll move on to the other markets. So let's go ahead and open up the Dow Jones. I want to take a look at the Dow Jones cycle, because I believe that a lot of interesting things have been happening in this cycle, and we could be on the cusp of what might be a potential decline in the markets. Now there has been some inversion in this market, so what I did originally think was going to occur hasn't fully played out, but there's going to be a lot of similarities between the actual forecast and what's actually been playing out. So if everything goes according to plan, I'll go back to my original philosophy, which was that the end of the year should be, not exactly, but should be around the same price as what it started off at the start of the year. That is what the cycle is telling us. Whether that plays out or not is, yet to be seen. So it doesn't matter if the cycle doesn't play out. So it's not that the cycle is wrong. There are still a lot of similarities in what's actually occurring in the markets. And as you'll see very soon, when a cycle doesn't play out according to plan, it gives us clues as to what could occur in the future, because it creates a new cycle. And that's why you need to continually update your charts and update your cycles as you move forward, to take into account what actually occurred. Now, cycles are based on obviously various things, and at different points in time, history can often rhyme but not repeat. So we're getting a lot of rhythmic action happening on the Dow Jones market, but we're not getting an exact repeat. Obviously, there's different financial changes that are occurring in this current scenario, with the Federal Reserve in the US definitely pumping a lot of money into the economy. So whilst the indicators were pointing down for the year, at least towards a stable ending as it was at the start, so there's stability there, and definitely a lot of volatility occurring, we actually haven't gotten that. So if we can take a look at what's actually occurred, let me go ahead and just grab my green. We can definitely see that at the start of the year we were looking for a run up, which, if you didn't already know this, the gold-ish yellow tinted line is the forecast, and the black is what's actually occurred. And then we were looking for a move down, which is what we got, so that was good. Then we were looking for a move higher, as we can see that actually occurred, and then a move down into some sort of double bottom pattern. And if we look at the forecast, if we look at the actual, we also got that too. So we're getting a lot of rhythm happening. And then we get our move up into a top, and it's quite obvious that if we look at the orange one, that's what occurred. We get our move up into a top, and then we had our sell-off, our bounce, and then our rollover, which on the forecast was the sell-off, the bounce, and then the rollover. And now this period here is where we're starting to get some divergences. So the forecast was pointing towards potentially lower prices, but the actual market was increasing in price, okay? So if we look at this top here and this top here, what you can easily see is that this top here and this top here in the actuals are actually inverse, okay? So that is what I was talking about. So whether from this point here the market falls down or just scoots higher in an inverse action is yet to be seen. So we are looking for this potential September decline of a sharp, potentially sharp, I don't want to say it's going to happen, potentially sharp decline on the forecast. But whether we sort of get a sharp increase, that's kind of, we'll see what happens then. Anyway, let's say, for example, we run into the mid of September and nothing occurs. Well, all we need to do then is rebase this period up here and see what's playing out. So let's go on and continue with that in mind. let's take a look at now the time cycles, okay? Now I'm going to blur some of this out because this is a bit of research that I don't want to share too publicly. But let's go ahead and take a look, and I'll give you the dates that I'm watching as we move through September, okay? So the September dates that I am watching are going to be the 5th of September, 10th of September, 15th of September, and then we got a time clustering, not a price clustering, between the 22nd and the 23rd of September. And then the month finishes off with another time target repeat of the 28th of September. So those are the dates that I should be watching, and if everything goes to plan and it moves into our price, this is how we combine it. So we've got our 45-degree angle and our 220-degree angle, and I'm not going to have these exact, okay, so these numbers are definitely way off. But this is sort of what I look at when I see the market move between these angles. So if the market can come up, and it sort of comes up slowly, hits the 45-degree angle on the 5th of September, then that would give me greater clarification or confirmation that the market is likely to reverse instead of continuing to move up. Again, if it moves up and crosses straight through the 45-degree angle and continues to rise up and then finds congestion against the 220-degree angle on the 10th of the 9th or any of these time counts and then starts to push lower, that's going to give us clarification that the market's likely to move lower. So that's how we combine price and time together. Now obviously the ideal scenario would be to hit this like this sort of fashion, okay? That's where we sort of want these dates to occur. But in some instances we get moves like this, where we get major tops occurring, and then we can see that we're getting a support and resistance level in these areas, and we sort of wait for the break. Now a lot of people, when they come into this sort of field, they just look at price analysis and they go, this is a price level that the market's not reaching above. But what I want to know, which gives us greater clarity when we focus on the time aspect, which is something that W.D. Gann spoke about, and all these other astronomers and astrologers and financial market technicians who focus on time as an element of forecasting and predicting the markets. Definitely this is going to be the greatest clarity when we can get these time counts providing us with at least some degree of confirmation that the move is likely to move higher or lower. So as an example, when we get our time count marking a top, and then we get another, this was a hidden time count that we published, then we get another, and then we get another. These are moves in and out of time counts that you're not going to be able to find in just ordinary books on mainstream financial markets. So that's why I focus on it, and that's why I built my whole career around this element of forecasting, because I believe it is by far the best way to trade the markets. So we've still got the market moving higher, and it is definitely above these moving averages, which was the golden cross and the death cross that everyone was watching, so that's good to see. From a weekly perspective, we definitely have a price overbalance continuing, which is, if you don't understand what the price overbalancing is, essentially it's where price, for example, in a bullish or bearish scenario, exceeds what was occurring in the past, okay? So we sort of had this choppy movement here, and then we had several bars moving higher. This here is a price overbalance and also a time overbalance, which gives us confirmation that the trend has likely changed, okay, at least in the short run. Okay, we can definitely see monthly charts looking up, looking good. The swings, we had this, let me go get my drawing tool. We had this break here, and I said take it with a grain of salt, and as we can see, markets, I think it's broken up again on the Gann swing. As long as our longer term Gann swing, such as the weekly chart, the weekly Gann swing, continues to point up, we should be in a good territory. Once these ones start to point down like that, that's where it starts to get dangerous, okay? So let's move on, take a look at anything else we can see. Kagi, still looking good, still looking strong. That's what I want to see as well. Price, we definitely, as we can see, we had these boxes drawn, and these areas were pinpointed as areas where the market may find resistance and support, and or you could have used them as areas to take profit or re-enter the market. So as we can see, when I entered the orange area here, we definitely got a lot of congestion around this area, back down into the green area over here, and then it's come up into this green area here, and it's sort of staying around there. It's now going to break out of that, and then that would put our next area to be watching between the 52 to the 53.5 area, but give or take a couple of percent. So from the 51.5 to maybe the 55, definitely another area to be watching for potential take profits and also entry areas into the market. Alrighty. Patterns. So, I mean, we could start drawing in pennants and things like that here now. I've left them blank though. Regarding Elliott wave, definitely if we are in a final wave 5 into the end of the market bull run, an important date to be watching on the Elliott wave sequence at least is the 15th to the 17th of September. So we could get a decline maybe into a low, or we could get a top into a high around this point, though I put a lot more emphasis on the 21st of September as an important date as opposed to something before it. So let's go ahead and wait to see what happens between the 20th to the 23rd of September, as that's more critical in my opinion. Regarding the cycles, again, we have a cycle ending in this area here. So we're just looking for a high or low to occur. If I go ahead and just get my cursor, we're looking for anything from maybe the 7th of September out to the 5th of October to be a potential high or low, with another sequence finishing between the 5th of October to the 2nd of November. Look for the higher lows, that's pretty much where it's at, and we'll go from there. Finish off with this final chart of the seasonality. Well, actually, let's go to seasonality first, and then we'll go back to mass pressure. So seasonality and mass pressures. September, generally speaking, is a bearish month. Whether that means prices are going to go down or up, it doesn't guarantee what's going to occur in the market. It just says that out of all this data between, so the monthly performance between 2011 to 2021, so 10 months of data, the month has actually been negative. Okay, so it's actually given us a negative value of the Bitcoin price during that specific month. So that is another reason why I've been watching September, whether that occurs or not. So this analysis here could essentially mean that 7 out of the 10 months have been down and 3 of them have been up. So whether this month of September that we're moving into now is going to be an up month or a down month is yet to be seen, okay? So let's go back to the mass pressure. And what we're waiting for here, again, we just have the forecast. It's just a bunch of up and down prices, and then we have our actual market data, which is up and down prices. We're waiting to see what occurs around here for the month of September, okay? Now we are looking for those higher lows to occur around this period here. So I wouldn't be surprised. Remember, our higher lows just have to be higher than these periods here, okay? So these ones here were our forecasting points moving forward. So as long as our lows that occur in this period here are higher, the cycle repeated and the cycle is going to continue. Once we get through October, then if the forecast is going to be of any value, that should put us into a final blow-off top, which will mark the end of the Bitcoin cycle. And I definitely will be looking to de-risk my portfolio and sell the majority, if not all, of the assets. Now, it's a little unsure as what that's going to look like yet, but I will probably be selling. I've kind of made a soft decision to sell around the 21st to the 22nd of December, as I believe that's going to be an important time period to watch. You do whatever the hell you want. I don't really care what you do. But for me, I think the 21st to the 22nd December is probably going to be a good area to take profits. Potentially, like this is if the market moves up, also potentially a safe area to take profits. So the market could move up for another month, it could move up for another 2 months, but I'm happy to take my money from the markets and then sit on the sideline, because when I look forward into 2022, it doesn't look too pretty for the first several months. So that's why I want to remove myself from the market and at least de-risk instead of just going in with the blind eye and hoping and praying. So that's my strategy, okay? Anyway, I'll leave that with you. I hope you got at least a little bit more value out of this video than you did the last one. And each time we come back, we'll keep growing and growing together and increasing our knowledge together. If you like this, hit the thumbs up. If you got any value, feel free to stick around by subscribing. And if you learned anything, drop a comment. I'll talk to you soon.